Let's welcome in Rohit Shrivastava of Sharekhan. He's now joining us. Rohit, thank you so much for taking out time for us. Let's just first talk about the global markets. What's the sense that you get? You think this risk-on rally, which is going across around the globe, especially in emerging markets, would continue?
I think you have to look at it in two time frames. One is that are you looking at 5 years, and second is are you looking at the next 6 months? So my sense is that the risk-on rally essentially started at the start of 2016. Okay, and that involved rising commodity prices, a good rally in crude, and so on. So a lot of the risks actually petered down. In the interim, you've seen the dollar rally also cool off. It's made many attempts to go above the 100 mark, but it keeps coming back. And so that has actually helped this entire trade. And I think that trade for the time being,
could you just again repeat that? What has happened with the dollar index which has helped the market?
Yeah, it's made many attempts to go above the 100 mark, but it's essentially not being able to hold those gains. So my sense is that, the dollar rally is done with for the time being, and so the entire reflation trade which was driving up the most of the emerging markets apart from India, so if you consider even the BRIC, Brazil, Russia, China, essentially commodity producers, benefit from rising prices of the underlying commodities, which is copper, zinc, aluminium, which have all seen significant rallies in the last year. So that trade, I think, for the time being has paused. I wouldn't say it's paused for the long term, because after we see a correction in that trade, I think probably there is a potential that it can resume. But for the time being, because it's done, I think you have to be prepared to see some downside, some kind of a correction in many of these markets. In fact, most people may be missing in the enthusiasm of today morning that the Shanghai index is actually down 50 points. It's actually breaking a 2-year trend line, and that means that it might have already started the next leg down. So this is where we are missing what is happening. But then, India tends to be somewhere between the emerging market space and the developed market space, because we are neither major commodity producers, though we do produce some commodities. At the same time, we benefit from the business growth that happens in maybe the US and Europe, because we are outsourcing. So we have a mix of these businesses, and therefore we are in between in this space. And so you get confused whether you should be looking at EMs for India, or should you be looking at, the US for India. And but if you purely look at the EM rally, which was based on commodities and the reflation dollar trade, that I think for the time being is done.
Right. Shanghai markets, as you pointed out, are down about 1 to 2 odd percent. Now, generally, Chinese markets have always gone in a different direction versus where the global markets are going. So why is it important if it cracks down further?
Okay, so it's not just China. It's if you look at the last 1 to 2 weeks, you can see the same in Brazil. You can also see the same in Russia. So it's not just China, and that's why I said it's you have to look at these as commodity producers. You can look at Australia, Canada as your entire basket. You can look at their currencies, for example. Most of their currencies were getting stronger over the last 1 to 1.5 years. But over the last couple of weeks, we've actually seen the reverse of that. We've seen the dollar actually strengthen against some of these currencies. So look at them as a basket, and then you'll see that it's not only China, it's the entire basket that has gone through this change.
Right. Let's talk about Nifty as well. What are your levels? What are the levels to watch out for in Nifty? Do you cite a major correction, or what is the level on the downside below which you would become cautious?
Right. So that's interesting, because it looked like the recent high that we made, 9,222. My thought was it would probably not get surpassed. We are still below that, so it's not that the trend has changed completely. And you haven't really seen any significant sell-off maybe in the US and European markets apart from that one-day reaction that we saw sometime mid of last week. So I think these markets could possibly correct further. But on the Nifty itself, on the downside, you need to watch 9020 to 9030. Because if we have got to get a significant crack, I think that level has to break. So that's the base level that you should watch. And once we actually close below it, then I would start expecting maybe 8940 down to 8750 as the next two possible levels. So that's the immediate level we will watch for. If it manages to hold 9020, then it's possible that you make another attempt at 92, 9300 once again. So that's how you'd watch.
Right. Let's just look at Nifty. So, you said that 9020, 9030 is important. So till then, there is no particular trade or no particular strategy that one should form on Nifty?
Purely on Nifty, well, if you've been selling the highs, then you'd probably wait, because you haven't really gone above a point where you can say the trend has changed. So if you've been selling into the highs at 91, 9200, you're really still waiting for 9000 to break. You don't want to get out of this trade, because if tomorrow morning the market gaps down, you would have actually lost out. So somebody who's been building shorts would probably wait and watch. You'd probably wait even till 9200. Till that point, I don't think you can say that you're going to go much higher. And at the same time, watch this week whether we actually break 9020. So I would give it still a couple of days more. And if it does not happen, then probably we would think about the potential that you get a bounce back. But then think of it again that will that bounce back be significant, or will it just be a retracement? So I think you'll have to continue to watch that development. What has happened in terms of why I'm highlighting that you still need to watch is that there's been a major divergence between the mid and small cap space and what is the index itself, which is mostly the large caps. And this divergence is not only occurred over the last 2 weeks, where you've got new highs in the mid cap index and you've got new lower lows, lower highs in the Nifty itself. But this divergence also exists over a 2-year period, where if you take the Sensex, you're still not above the 2015 high that we made. And whereas each time the Sensex has essentially attempted to come back to the highs, the mid cap and small cap indices actually made new records. So this is also a larger degree 2-year divergence, while it is also a 2-week divergence. And these divergences, the higher the time frame in which you see them, they also signals of a potential trend reversal, which you want to actually watch out for. So that's why while we are still in this range, where the Sensex is just below the 2015 highs, the Nifty is still barely 50 to 80 points above the 9115 that we made 2 years ago. You want to see whether these levels are sustainable or not.
Right. As far as real estate stocks are concerned, what's your call on DLF, IBREL, HTIL? Have they given a substantial breakout to make you go overweight on these names?
I still wouldn't think so. I would agree that they've surprised me on the upside, because I was not expecting them to get this far. But at the same time, I wouldn't take a long-term bullish bet on this sector as yet. I think it's a little early to take that call purely based on some news items that have actually come out. And it requires some more watching and to look actually for the next maybe correction in this sector, and then take a call as to whether a bigger move is possible.
Right. So, as you said, that it's very difficult to say whether these stocks have bottomed or not. But, if you just look at the underperformance that these names have had, the resistance levels are also pretty high. So there could be substantial trading upside into this sector.
That's already happened. I mean, if you take the last 6 months, stocks like DLF or Indiabulls Real Estate have only been up over the last 6 months. They haven't really gone down. They haven't corrected too much. So that's reason enough to believe that they've had that kind of a substantial rally. And so from today's level, you're already up there. I mean, how much more are you going to gain is the big question.
Right. So basically now the risk is to buy from here on. Risk reward is not attractive.
Yes, that's right.
Right. I don't know, Rohit, if you look at HDFC Bank or not, but it's been perpetually in a bull run. We had results on Friday. It was up some 3% on Friday, and it's up another 2% today. Do you think, again, it started a move on the higher side if you look at HDFC Bank?
Slightly tough call. And I try to look at the banking sector as a whole. And when I do that, say over a 1-year time frame, this is the trend. We've definitely, not seen a reversal in the public sector banks. What we have seen, though, is some kind of a rally in them as hope, comes alive. On the other hand, within the private space, if you just go 2 years back, you had, high performance even in stocks like ICICI Bank and Axis Bank. And suddenly they became, underperformers. And I think that is slowly spreading. You recently saw that happen in Yes Bank. Of course, you may think right now that it's just a one-off event. But I think that slowly that a large part of the private bank space will also, enter a corrective phase, because they do keep getting more and more expensive. So when you're really taking a slightly longer term call, you'd probably see it as a sector that is topping out one stock at a time, rather than look at it as a sector that is running away. And that's a very, very different angle versus if I just think about, last 1 week or 2 weeks and look at the new high in the stock and think that, it's rallying. So there's a completely two different angles that you can take to it.
Right, but do you think the sector has topped out? Because till now they are looked as compounding machines which can grow 20% per year.
See, you definitely don't want to call a top on something that's running away, but you want to be aware that it can reverse and look for reversal signals. So I think I would probably think that what happened to Yes Bank could be a sign of a reversal signal. In HDFC Bank, we still don't have that very clearly. But I would say that it's in the late stages. So you need to watch out. You need to watch, have a level in mind. You could use a 20-day average or a 40-day average, whichever you feel comfortable. You could use a weekly level, a weekly swing. Whatever level, have one level in mind below which you'd conclude that this move is done. Especially if you're trying to take a slightly medium to longer term position in these stocks.
What's your view on PSU banks? You think the way private have outperformed PSU, if private banks were to top out, would PSU banks do better?
No, I think the PSU banks may have already lost their momentum, which is visible in some of them. So my sense is that PSU banks actually head possibly lower from here. I think the upside might get limited. They've made multiple attempts to move up, but each of them have actually faltered. So I think it still remains the weakest space and will continue to be so till we actually done with the recapitalization process, because I think it's hard for anyone to actually put the numbers in terms of how much of their capital which will actually get downsized in that process. And when that happens, then suddenly all the valuation metrics will change and you might not find them as attractive as you think they are today.
Right. That's of course, as far as valuations are concerned. But for PSU banks also, something like we discussed in real estate. So they have been continuously into a bear run phase, and the recent outperformance is just a correction because markets were these stocks were very oversold.
Yes, that's right. And they had a large part of that good rally was actually last year. And this year, while I did think at the start of the year that they would probably do something again, the gains have actually not been that magnanimous so far, so which is why I'm sensing that maybe it's done with. I mean, many of them have just barely surpassed their previous highs that they made in 2016. Some of them have not even been able to do that, and so it's beginning to look like they're losing momentum at a slightly larger degree on, say, weekly charts. And so the sense that I'm getting is possibly they're already done with their moves.
Right. Let's talk about Reliance Industries. You think that can outperform, that can support the index? Maybe these sectorial changes may happen as you're speaking?
I think Reliance has been supportive. So again, the case is the same. There have been a few index stocks that have kept the Nifty at these highs. Reliance is one of them. HDFC Bank, Yes Bank was one of them. So there are a couple of them that have actually helped. Otherwise, you would probably not have seen the Nifty at the current level. You might not have seen it even go above 9100 because you've seen a lot of similar weakness in strong sectors of the previous year, which are like technology, for example, has been one of the weakest performers of the year. The pharma sector, which was a major weight a year back, doing extremely well, is actually continuing to underperform even today. And so these sectors have been pulling the index downwards. So if it wasn't for a Reliance Industries, I don't think the Nifty would have had the kind of support. But to say whether Reliance Industries will continue to steam up from here and head towards 1600, I think it's a bit early. I think possibly if it has to go up, it will probably correct a little more in the weeks ahead. Maybe pull back to 1300 or so before you actually see a meaningful rally again.
Right. In terms of Reliance, and I'm just talking about the numbers which are expected today. So they're expected to be very strong. Or let's just forget Q4 and let's just look at the next 6 months. It's still a hope rally. It's still a rally which is building in a lot of expectations as far as Reliance is concerned. So if that doesn't materialize, the 9,020, 9,030 levels on Nifty can be easily breached.
Well, to say that it would happen only on Reliance, it would require that Reliance actually makes a big sell-off, and if you say that, the numbers are going to be, much better than maybe most are expecting, then that might not be the case. But if there is any kind of negative surprise, it's definitely possible because, like you said, a lot has been priced in. And Reliance does remain a commodity-related sector, and so it's also a reflection of the reflation trade that has happened around the world.
Right. I did not mean only Reliance will take the index down, but what I meant is that there are only a few names which the street is positive on. So if there is a negative surprise onto them, markets could fall much more.
I'll put it this way, that maybe you'll get profit booking at some point of time based on, actual news. So, you have an expectation, the expectation is met, and then after that, people start booking profits, based on the classical principle, then you buy on expectations and sell on news. So I think that would be possibly what would go with, a Reliance or an HDFC Bank and so on.
Right. Rohit, thank you so much for taking out time for us. Always good to get a perspective from you.